The US dollar is higher versus the three major currency pairs: the euro versus US dollar, dollar versus yen, sterling versus US dollar. In this video, I'll take a look at the technicals that are driving those currency pairs. So let's get started. Yesterday, these three major currency pairs moved, had the dollar moving lower against them. And in trading here today, that is a little bit of a reversal, with each of them moving about 0.35 to 0.4% from the closing level from yesterday. Let's start by taking a look at the euro versus US dollar and see what the technicals are telling us now. And in trading yesterday, we did find resistance sellers against the 100-hour moving average that was here and here, then broke above that level, and that gave the buyers the go-ahead to push higher. They broke above the 200-hour moving average. As you can see, we tried to stay above that moving average here, extending up to toward the next target level, which would be this high price at 1.1439, but fell short of that. And then in the Asian session today, we fell back below the 200-hour moving average. Since then, we've made another run toward the 200-hour moving average with the break above that level in the European session, but that move failed, and we're starting the day in between the 100 and 200-hour moving averages. As you can see, that is a neutral area as the market tries to figure out which way it wants to go, and as evident from the price action, that is what we're seeing in this pair, is that uncertainty for the directional bias for the euro versus US dollar next. So if we do break back above the 200-hour moving average at 1.1399, a nice round number near 1.14, that would tilt the bias more to the upside. Conversely, we've seen two lows down here that came near the 100-hour moving average. If we break below that at 1.13667, that would open up the door for the downside. Obviously, you can see that the range for the euro versus US dollar is fairly narrow, so there's room to roam on a break in either direction. But of course, we've already been higher, so a break to the downside would extend lower. Half traders looking toward these lows right here, and then the more important, I think, level would be this level right through here, where we had double bottoms from last week's trading near the 1.13072 level. Break below that level, and we'll look toward that 73 level. That 73 level, once again, comes from the daily chart. 61.8% retracement is at 71. This high comes in at 1.1275. So 73 is the midpoint between those levels, and break below that level, and we're seeing more bearish bias for the euro versus US dollar. And the dollar versus yen, the pair moved sharply to the downside yesterday, and like the euro versus US dollar, broke through both moving averages, the 100-hour moving average first, 200-hour moving average next, and we came down to this swing area down through here, which I had earmarked as the next key target, defined by some lows through here, and it actually goes back in time as well, back through in history over through there. So just believe me there. And these lows right through here, basing against the 100-hour moving average here also before moving higher. The high of that swing area came in at 141.94. The low comes in at 64, so we're going to need to break below that area. We couldn't do it. We started to rotate back to the upside, and like the euro versus US dollar, trading in between the 100 and 200-hour moving averages. The market tries to figure out which way the next shove will be. Get above the 100-hour moving average is more bullish. We look toward this area up through here. Move back below the 200-hour moving average, and this swing area down through here becomes the next target on the downside. So, trying to figure out which way to go for the dollar versus yen is next. Finally, let's take a look at the sterling versus US dollar. I'm going to go to the daily chart first. In trading yesterday, we moved to the highest level, going all the way back to this point right here, which is back in February of 2022. In trading yesterday, to do that, we broke above the 2024 high, which came in at 1.3433. This high right here, going back to this point right here, was at 36. So we broke actually above both of those levels, moving into the 40s for the sterling versus US dollar. That should have sent the price higher, but it didn't. As you can see, that we moved into like the 40, 41, 42 area right through here toward the close and into the early Asian session, and tried to keep the bias going to the upside, but couldn't do it. And as you can see, we eventually failed, breaking back below these highs right through here from last week's trading. And we've seen since a rotation further to the downside. Our next target on the downside would come in near this level right here, where we had where it defined the extreme Up through here, we moved higher, came down, moved higher, tested the old high, came back down, and then broke below that level. So that old floor in this extreme area up here becomes now support for traders in trading today on further selling. If we do break below this level at the 1.3362 level, we'd start to look toward the rising and near converged 100 and 200 hour moving averages would come in at 1.3326 in trading. Yesterday and the week last week, we did move below the lower 200 hour moving average on a number of different occasions. Each time the market would move below that level, couldn't develop much momentum to the downside. So if the sellers are going to take more control at these lofty levels going back to, again, 2022, we need to get and stay below 100 and 200 hour moving averages to do that. The good news is that both of them are together, so it makes it easy for us as traders to earmark the key level to get to and through to increase the bearish bias. So there you have it, a look at 3 of the major currency pairs to kickstart your trading day. My name is Greg McCloskey. Good fortune with your trading. Bye-bye now.